Have you ever glanced at your grocery bill and just wondered why everything seems to be creeping up in price? Well, the real reason might not be in your local market, but actually thousands of miles away. In this explainer, we're going to trace the surprising invisible lines connecting global conflicts directly to the prices you pay every single day.
It's a feeling we all know, right? You're at the checkout, you see the total, and it just feels like your money doesn't go as far as it used to. But what if I told you the root cause of that price hike has nothing to do with your neighborhood store and everything to do with something happening on the other side of the world?
You know, the easiest way to wrap your head around this is to picture the global economy as a giant calm pond. Now, when a major event happens, like a conflict, it's like a big stone gets dropped right in the middle. Those ripples, they spread out wider and wider, and eventually they reach our shore.
All right, so what exactly are these stones that are dropping into the pond and causing all these waves? Let's take a quick look at the major global hotspots that are sending shockwaves through the world economy right now.
We're really looking at three major areas of turbulence. There's the escalated conflict in West Asia, you've got the ongoing war between Russia and Ukraine, and then there are the constant disruptions to shipping in the Red Sea, which is a critical trade route. And look, each one of these on its own is a massive deal.
You see, these aren't just headlines from far-off places. They directly mess with the flow of essential things like oil. They block up the superhighways of the sea that carry our goods, and they make investors all over the world really nervous. Okay, so we've got these huge shockwaves out in the world. How do they actually start to hit a country like India? Well, this is where that first big wave makes landfall, and the impact is immediate.
Now, this one number really tells a huge part of the story. India has to import between 85 and 90% of its crude oil. Think about that. That is an enormous dependency on the rest of the world for our energy.
And because of that huge dependency, it means our economy is incredibly sensitive. Any hiccup, any disruption in the global oil supply, we feel it, and we feel it fast. And just look at what that sensitivity means in practice. When tensions flare up in major oil regions, the price of a barrel can just skyrocket, in this case, all the way up to $120. For a country that imports so much of its energy, a spike like that, well, it's a huge shock to the entire system. And believe me, this isn't just some abstract number on a chart. It translates directly into something we all feel: inflation. For every $10 jump in oil prices, our inflation rate can climb by 35 to 40 basis points. And a basis point is just a tiny fraction of a percent, but they add up, pushing prices higher for everyone.
And it doesn't just stop there, not by a long shot. Higher oil prices can actually slow down the entire country's economic growth. Plus, we have to pay for that oil in US dollars, so as we spend more, the rupee can get weaker. And a weaker rupee makes everything we import even more expensive, which just adds more fuel to that inflation fire. Meanwhile, the stock market gets jittery, and trade gets all tangled up in delays.
Okay, so that's the big national picture, but here's where it gets real. This is the final ripple, the one that washes up right on the shore of your personal finances. This is where those global headlines hit your wallet.
Let's just boil it down. Inflation is a fancy way of saying your money doesn't stretch as far as it used to. Every single rupee you earn buys a little bit less. It's that slow, sinking feeling that your purchasing power is shrinking.
And where do you actually see it? Well, you feel it at the petrol pump for sure. You see it in the price of your cooking gas cylinder. But it also affects the cost to transport food from the farm to your plate. So vegetables, cooking oil, milk, they all get more expensive. It can even nudge up your electricity bills and help keep the interest rates on your car or home loan from coming down. All right, so I know this all sounds like doom and gloom. It's easy to see these global conflicts as just a long list of negatives. But here's the twist. In any major global shift, believe it or not, new doors can actually open. You see, when things get shaken up on a global scale, it forces everyone to rethink how they do business, where they get their supplies, and who they partner with. That forces a change. And change, well, that creates opportunity.
And for India, this actually opens up a couple of really interesting doors. First, you have companies all over the world looking for stability. They're trying to move away from relying too much on any one country, which gives India's China Plus One strategy a massive boost. That means more manufacturing, more investment, and more jobs coming our way. And second, in a really complex geopolitical dance, sometimes these big shifts allow for new deals. Securing energy from sources like Russia at a discount can help take some of the sting out of those crazy high global prices.
So let's step back. After all these waves have crashed and the water settles, what's our new reality? Well, the whole landscape has changed. The water level in our pond, so to speak, is just
different now?
So on one hand, in the short term, we're dealing with these immediate headaches: inflation, a shaky currency, volatile markets. But on the other hand, and this is crucial, these very challenges are forcing some positive long-term changes. They're pushing us to diversify our supply chains, to create smarter energy policies, and to speed up the move toward renewals.
And it's really important to end with this perspective. Yes, the shocks are real, but India has some pretty powerful built-in shock absorbers. Our massive domestic market and a really diverse economy mean that often we can handle these global storms better than a lot of other nations. And all of this really leaves us with one big question to chew on. If this kind of global instability is just the new normal, what are the most critical ingredients for an economy to not just survive, but to actually thrive? Is it about being energy independent? Is it having a diverse economy? Or is it something else entirely? That's the real puzzle we have to solve in the years ahead.